Right.
Yeah.
Welcome to. Yeah, go on.
I'm sorry. I think tomorrow I'm gonna have a lamp here because I realized the lighting is not too great on my face. Do you think?
I've got a ring light, and it's quite helpful because my room sometimes is a bit. The lighting is not always great. I don't think they care too much. Honestly, I think how you look on screen at the moment is fine, and you're not going to not get an internship because of lighting.
Yeah, that is true.
Yeah, they care about. Look, I see a guy in a suit dressed well for interview, right? And for me that's enough, and for most people that'll be enough. Right? I think people kind of. I think they're a bit understanding to the fact that it's work from home and the environment, and they're not going to be too harsh on that. They care more about your content and your presentation, and I think that's fine.
Cool. Yeah, that sounds great.
All right, cool. So welcome to your mock interview with Debs, SmartX interview. Let's call it JP Morgan. How about we start by you telling me a little bit about yourself?
So, hi, I'm Marcus. I'm a second-year industrial economics student at the University of Nottingham. Sorry about that. Sorry, can you?
Yeah, lock it. Yeah, I can hear it. Lock it off.
Sorry. Yeah.
It's good that happened, right?
Yeah.
And this is literally. I'm actually happy. I'm happy that happened, right? Because it's happening today and not on your real thing. It gives you a chance to make amends and make sure that doesn't happen in the real thing, right? That's what these sessions are for, because it's likely you prepared fantastically well for an interview, but you just forgotten that last little detail, right? Just to turn your phone on, put your phone on silent. Yeah. I'm not gonna bash you too much on it. To be honest, this is where maybe having a bit of a gift of the gab comes in, because you now need to. If that was to happen in the real interview, you have to flip it, bro. You gotta laugh it off and say, "Oh my goodness," you gotta laugh it off. Don't let it affect you. Not put you under more pressure, and then you keep moving on with your interview, right? And then you shine. So it might be a little joke at the end. He says, "Okay," and apologize at the end. Sorry, my phone went off at the beginning. But if you deliver a good interview, it's not going to be a thing where, well, I don't think it should be a thing where they say, "Oh, his phone went off in interview. Don't give him the offer." But you don't.
I'm just gonna turn it off.
Yeah.
Stop it. Cool. So should I continue with my answer?
Yeah. Tell me about yourself.
Yep. So I'm Marcus. I'm a second-year industrial economics student at the University of Nottingham. So 2 interesting facts about me is I've actually represented my country at international level for futsal, and I was actually involved with one of the Nike World Cup adverts for the last World Cup. So although sport has always played a massive part in my life, I've always had a firm passion for markets. So this first started at 16, where I created my own trading page, posting the trades I was taking on a daily basis, before fast forward to co-founding my own student-run investment group besides 5 other students at university. This has led me to completing spring weeks at RBC, EY, JP Morgan, and Corella Weinberg Partners in my first year at university. And besides this, I've also completed the Learning Equity series and been on the Advancing Black Pathways program for JP Morgan, which has inspired me to be a global market summer analyst at the firm.
All right. Good answer. Just include what you study.
Cool.
Okay, you did say industrial economics at the start. Yeah, okay, you know what? Good answer. I like the fact that you led with your story. A lot of people, when asked, tell me about yourself, goes on to what they study at uni and the fact they want to work on the trading floor. They forget to actually tell me about themselves. What's your wow factor? I like the fact that you led with your wow factor, right? Football, futsal, England, and yeah, it's good that you led with that because that gets my attention. Okay, probably the next question I'm going to ask you, because it's still in the competency phase, is why trading? It was trading, right?
Yeah. So why trading?
Yeah.
Yep. So there are two main reasons I'd like to go into sales and trading. The first is the unique blend of both analytical.
Is it sales or trading?
I think this year they're kind of putting them together, but I'm applying for sales.
Okay. In your answer, you want to work in sales. Your internship might be sales and trading because it's a trading floor, but make it very crystal clear in your tell me about yourself that you want to be working sales. My next question then, why sales?
Yep. So there are two main reasons I'd like to work in sales. The first is the unique blend of both analytical and interpersonal skills needed to excel in the role. I believe I've had the opportunity to develop these skills, for example, my analytical skills on a summer internship with Collar Capital, a firm who operate in the private equity secondaries markets. And I believe this will be important in a job role where I'm looking to constantly establish client relationships to maximize the bank's revenue. Besides this, I've also had a long career in sport, and this has allowed me to work under pressure in fast-paced scenarios, which I've realized is definitely something I'm looking to take into professional life.
So, okay, why not trading?
Yeah, so I feel like this was, again, because of the interpersonal side of still working in sales. On my summer internship with Collar Capital, that was something I definitely really realized because I was going through all these investments, having a look at potential investments going forward. However, what I really missed was that client interaction, interacting with new individuals on a day-to-day basis.
Okay. What's the main difference between sales and trading?
So in trading, you'll be managing the bank's risk. Well, you're solely responsible for the profit of the kind of your team. So you'll be mitigating the bank's risk. And I guess the sales is kind of helping you in that, offloading positions to clients, etc.
Okay, cool. The trader manages risk, a salesperson manages clients. Interestingly, these days you do get traders going out to meet clients as well. Sometimes some clients really want to actually meet the trader. So yeah, there is a crossover in skill set, but primarily a trader manages risk, a salesperson manages clients. Which other teams within the bank do you think you'll be interacting with as a salesperson?
So I believe a team you'll be interacting with a lot is equity research. So if there's any new news events coming up, you'll have to be aware of them, and they may pass you on some information that may allow you or positively benefit you in a meeting with a client, which again can help them come on board to JP Morgan and maximize the firm's revenue.
Okay. Which other teams?
You could also work with compliance to make sure, well, I guess in a global markets team, you'll be working a lot with compliance to make sure everything is done kind of by the book.
Okay, which other teams?
So working with equity research, you'll be working with compliance. I couldn't give you a third one.
All right, cool. This question is asked for me to know if you've actually researched the different divisions and teams in an investment bank. I want to know, have you actually done your research? Because what if there's another team that you might actually be well suited for, more suited for than sales or trading?
Yeah.
Right?
Yeah.
Middle office, back office, prime brokerage, maybe sometimes risk management. Sometimes it might feel like a client has too much exposure in a certain asset class or something for the firm. So there might be a conversation there between trading and sales and risk management to have a conversation with a client to either reduce exposure or avoid adding more exposure in a specific country or a specific market. Sometimes there's risk management, and this is the one that comes under that rarely gets spoken about. IT. You're communicating with clients via Bloomberg all day long. Then your computer breaks and you can't do anything. So IT, service desk, people that come and fix your PC, that's another team. if you're working in trading, you also have finance, the finance team. They're the team that will create your balance sheet. Every trading desk has its own balance sheet, right? If a trade does, if you buy shares, the shares might take three days. That's called settlement to actually land in your account. Middle office take over the process once you book a trade. Back office, they make sure that trades settle, that you actually receive the shares. Right? If you don't receive the shares, then it's going to show up on balance sheet.
Yeah, that makes sense.
Trader looking at the balance sheet every day will know when there's an issue with settlements because the receivables is going up. You're not going to see that in sales, but I'm just adding this so you get that rounded knowledge. A lot of people, they hit a stumbling block when they get this question, and it's a very simple question. There are other teams that you could be interacting with at investment bank. Sometimes you'll interact with IBD, the investment banking division. These are the guys that do mergers and acquisitions, that raise equity and debt capital for clients. Sometimes you've got equity capital markets for IPOs of shares. Sometimes some clients might want to trade an allocation. And sometimes where there's a new issue of bonds, green bonds, you get an allocation if you're working in fixed income as well. So sometimes there is some interaction with sales. You know, there's a Chinese wall there as well. Prime brokerage, this is a part of the bank where hedge funds bank with the bank, right? And also mainly when hedge funds want to go short via short selling, it's the side of the bank that deals with that mainly. So more of an sometimes there's, you know, might want to read up a little bit about repo. Sometimes you do get this part in prime brokerage as well for fixed income, not just equities. And then treasury, more for trading as well. A trader will interact with treasury because at the end of the day, treasury are the ones that make sure there's not a net shortfall of cash or excess cash is reinvested at the end of the day via the overnight interest rate markets. OIS, overnight index swap. So something also worth reading into. But yeah, I think it's very important for me to put that in there because a lot of my mentees, they often don't think about the other divisions other than sales and trading and research. There is also structuring, which you should know about. And that often comes under sales as well. So with structuring, structuring is like a cross between sales and trading. You are creating a tailor-made product for a client. Client comes to you, it could be a corporate client like Coca-Cola. They say that, you know, they've got this exposure they're looking to manage or whatever, and you create a product for them.
Is that like the credit default swaps in the midst of the financial crisis?
No, and be careful asking questions like this. If you get to a stage of an interview and someone's actually explaining to you what something is, unless you're sure, don't ask these random questions. Just take the knowledge in and keep going. Some of your interviews could actually be this kind of format where someone's actually explaining to you how some aspects of the bank work. And some of them will be very technical, where they're testing you. And some of them are a mix between testing and explaining. They're not always baptism of fire interviews. That's why I've decided to, you know, explain a little bit. They might ask you a question, you might get halfway, they might explain the rest, right? And then I'll probably go and ask you the next question. Why JP Morgan?
Yep, so there's three main reasons I'd like to work at JP Morgan. The first is the huge brand and global exposure the firm has, especially if I'm going to be working in a client-facing position. With over 250,000 employees and operating in over 60 different countries, it offers me the opportunity to work with a diverse range of individuals and clients from different institutions. The second reason I would like to work at JP Morgan is actually to give back for the personal growth that they've facilitated over the past 12 months. So this first started with the JP Morgan Spring Week, which gave me my first real insight into a global markets division and a task that I may be doing. This then went into the Advancing Black Pathways program, which allowed me to understand a bit more about the technical skills that may be needed to excel in the job. The third and final reason I'd like to work at JP Morgan is the entrepreneurial culture of the firm. So last spring, I actually voluntarily entered the Learning Equity series. in which I understood that JP Morgan was one of the first financial institutions to offer their clients cryptocurrency exposure. So for me as an individual wanting to start my career, it would be inspiring to work at a firm that is pushing the boundaries of its markets and offering the clients the newest financial products.
All right. Good answer. Who's the CEO?
Jamie Dimon.
What's the share price?
$166 a share.
What's it done over the past year and a half?
It's gone down a bit, but it's starting to recover. Now it's looking like.
Be more specific. Is it doubled, tripled, 50%? Roughly what kind of growth could you have seen as an investor?
I couldn't tell you. That's something
okay, cool. Look at the chart and make sure you know.
Yeah.
And the only reason I'm asking that question is because the share price in the banking industry in general, and specifically JP Morgan, Goldman Sachs, they've done more than just your normal 10, 20, 30, 40%. They've, doubled. Yeah. So yeah, that's why I'm asking that. But other than that, you answered the question very well. I'm very comfortable with that. You knew where the share price was. I put you under a little bit of pressure. You knew who the CEO was. Another nice stat you could have added is their AUM. Just when you were explaining, whether they're big or not. But other than that, your answer was fine. And the last bit of competency is where they might ask you a personal question, a scenario. Give me an example of a time you faced a difficult situation and how did you overcome it?
Yep. So one difficult situation I faced in the past was being released from Sheffield Wednesday at 16. And to give you an overview of the situation at the time, I was training over 5 days a week. I was also visiting a personal trainer on the side. So after my release, I could have acted extremely poorly. I could have lacked with my training. So instead, I looked to be proactive. I started arranging sessions with extra teams and also visiting the personal trainer more to make sure I was staying fit and able to perform to the best of my ability. So my determination and proactiveness in this situation actually paid off in the following few months, where I was called up to the England under-19 futsal squad, and I also made my debut playing semi-professional football in the 7th tier of English football.
Good answer. Very good answer. I love this scenario. It's another wow factor. I know you did mention England there in your Tell Me About Yourself. They may not necessarily ask you that competency question I asked just now. Yeah. And I'm a big fan of forcing this kind of good stuff in, even if it means later on when they say, give me a time, you say, actually, that one that I mentioned earlier is one of the toughest things you've ever had to face. And maybe then you can maybe elaborate a bit more, but at least mention you were released from Sheffield when you mention your achievements for England under-19 at futsal, just say after being released from Sheffield Wednesday, right? That gives you the leeway to then come back if they ask you this question to explain it in a bit more detail. Yeah?
Yeah.
All right, cool. And that often is enough with competency. It's likely that every single question I've asked you up till now will not get asked. They might cherry pick and pick 2 of them, but I like to cover them on the sessions. Now, interview probably moves into commercial awareness, brain teasers, and then questions at the end. So tell me about a story that you've read recently. Actually, tell me what you believe are the top 3 things being spoken about in markets at the moment. Just headlines, like just themes.
Yep. So I definitely say inflationary pressures have been a major topic of, let's say, probably the past month. Secondly, I would like to touch on supply chains. We've obviously seen even Joe Biden came out and touched on how supply chains were causing an issue for the growth of the US economy. And thirdly, I would like to talk about the Bitcoin futures ETF that have just debuted on markets today, or they're planned to make a debut today.
All right. I don't like your answer. What would have been number 4?
Maybe tapering.
That goes with inflation.
Yeah.
Right.
Yeah.
The whole point of tapering is to kind of address
Combat.
inflation.
I'd say interest rates.
Nah. So the reason I didn't like your answer is you didn't state the obvious. And it kind of shows that you're not in tune with. There's one thing knowing what's going on. There's another thing knowing which ones are the most important.
Would you say Evergrande
Yeah, Evergrande should have been number one.
Yeah, because Evergrande's actually my.
You can get away with inflation tapering as a number one. You can get away with that, but you can't answer that question and not mention Evergrande.
Cool.
Right. So you know what I'm going to do? What made you mention Evergrande now?
Yep. So Evergrande is a new story that I've been reading a lot about over the past few weeks.
Okay, so that's even worse then, because that question just gets answered. Interviewer nods his head, smiles, but in his head he's thinking, how can you not mention Evergrande? Every single person I've asked that question today mentioned Evergrande as a number one, right?
Yeah.
And it's worse if you actually know what's going on. So you know what I'm going to do next is I'm actually going to ask you to explain what's going on with Evergrande in detail. I've been on holiday, heard the word, but I haven't actually read into it, right? So quick summary, what's going on with Evergrande? What's been the effect on markets?
Yep, so cool. Evergrande collapsed, and Evergrande is the second largest property developer in China. So it collapsed under $300 billion of debt, which accumulated through a higher risk growth strategy to accommodate, obviously, a very rapidly growing Chinese population.
Has it actually collapsed?
No, it's kind of in the midst of collapse.
Okay, be careful with your language. Go on.
Yeah. So this had a profound negative effect across equity markets across the globe. And this is partly due to the fact that property and construction actually makes up 25% of Chinese GDP. Therefore, if we've seen firms like Evergrande collapse, it could be hinting at slowing economic growth across the world. The midst of the collapse of Evergrande caused the S&P 500 to fall by 1.7% on the day of the announcement, and the Nasdaq 100 to fall by 2.9%. And since this, I've actually been reading about how the midst of the collapse has led to property developers in China being shut off from global debt markets, with only one firm being able to sell dollar-denominated bonds since the event. Okay.
You know what? Good answer. Good recovery. I absolutely like the fact that you know what the effect was on markets. But you didn't mention the Chinese yuan, and you didn't actually mention the Evergrande share price.
Yeah.
And what happened to it? You start with the company, right? What actually happened to the Evergrande share price? Yeah. In detail. It was at this price, it dropped X% to this price. And since then, it's done this. And finally, if you want to put icing on the cake on that answer, give your own personal opinion on what happens next. I think there's a big chance they could collapse. Or I think, you know what, they've missed a few payments and they might actually be bailed out, or they might be okay, right? Yeah. You have to have an opinion as a sales guy. Clients ask you these questions all the time. I've been on holiday, blah, blah, blah. What happened? If it was a trading interview, I might have changed it a bit more and tried to be more from a risk management, come at the question from a risk management angle. Once you tell me you're trying to be in sales, I'm trying to say, what's your opinion? Yeah?
Yeah, so on the actual, when it was asked for a recent news story we've been reading about, on my usual plan, I've kind of got a trade idea short in the S&P China 500. And then also, after the Chinese firms were shut off from global debt markets, maybe talk about purchasing credit default swaps, as if they're not able to refinance their loans or sell bonds, it could lead to a high risk of default.
Yeah, just use that to add a bit more polish to your answer. Yeah? Yeah. Remember, this coaching is to help you stand out. I don't want you to be mediocre. I want the interviewer to feel like, wow, this person can do an internship now and should be getting a final offer at the end of that internship now. That's the impression you want to leave at assessment center. Cool. You don't just want to get onto the internship. You want the guy on the other, or the lady on the other end of the Zoom screen to be thinking he's ready. I've interviewed 15 people today, and yeah, this person head and shoulders above everyone else. Because this is what happens when you start being mentioned behind the scenes. They're already waiting for your internship and trying to find your team. They might tell you 3 weeks into the internship, you've got a full-time offer. That happens to some people, and it's PR. And you get that good PR from your interview. You don't want to be scraping through the rounds, right?
Yeah.
Next question, the $1 million question, the question that makes or breaks people, right?
Yeah.
Very easy question to answer if you're prepared. If I gave you $1 million, how would you invest it?
Yeah, so I'd allocate the first 50% of my portfolio into equities and mainly two index funds, the first being the S&P 500 and the second being the NASDAQ 100. So I'd like to invest in the S&P 500 for two reasons. The first is being the economic data and the strong recovery from the coronavirus of the US. We're already seeing the economy operate at a GDP level greater than it did going into the pandemic, unlike countries like the UK. Besides this, Joe Biden and the Chinese leader Jinping are meeting in the coming months. And I believe a topic that could be discussed is the removal of tariffs. And I believe this could positively reduce the cost of American firms and lead to increased earnings, which will be reflected in the price of the S&P. The NASDAQ 100 offers us a great exposure to tech, even though the index is just the 100 largest firms in the US, excluding banking stocks. However, it is dominated by firms like PayPal, Tesla, Amazon, and Microsoft. So we've seen tech sales grow by 78% in the last year, and they've got a 24% predicted compound annual growth rate until 2024. And besides this, I believe it's a great time to invest in equities right now, especially in the US, if they've just dipped off all-time highs due to inflationary pressures, news concerning inflationary pressures, and the Evergrande pandemic. However, the next 15% of my portfolio, gold, should look to kind of hedge this in our portfolio. So I believe this will offer two main benefits. The first being a short-term hedge against economic uncertainty. For example, as I previously touched on, the NASDAQ 100 fell by 2.9% when the Evergrande collapse was kind of announced, but in the same time, gold increased by 0.5%, showing us that it will slightly offset our losses in the portfolio. The second being gold is a great hedge against inflation. When inflation has averaged over 3% a year, gold has actually returned on average 15% a year, showing us it can really be a staple piece of our portfolio. So the next 15% of the next 15% of my portfolio, I'd like to invest into aluminium. So aluminium has doubled in price in the last year from $1,500 to $3,100. And although we can't invest directly into it, I would like to invest through futures contracts. So it's increased in price mainly over the last year due to government policy. The US set out a $1 trillion stimulus bill for infrastructure, which increased the demand for precious metals. However, I'm looking to invest in aluminium due to its application in other industries. For example, it plays a key role in the production of electric vehicles, keeping them lightweight and a suitable substitution for petrol and diesel cars. In the last year, we've seen 2.65 million new electric vehicle owners, which is really outstanding when we consider the economic downturn we've seen and the fact that cars are usually a luxury good and not something usually bought in the midst of a pandemic. I believe this is not going to, the price increase is not going to decrease. It's not going to slow down due to the fact that we've seen countries like the UK planning to ban the sale of petrol and diesel cars by 2030. So the final the next 15% of my portfolio.
Wait. Where do you think aluminium can go to?
I believe it can go to about $4,000 per metric ton.
Okay. Include that in your answer.
Yeah.
Yeah. And exit targets. Wherever you feel, whatever asset you have chosen can get to, right? A target, an exit. Always include that.
Yeah, because I've just realized I didn't include the prices, but for example, I know the price of.
No, you did. You said aluminium can go from 1,500. It has moved from 1,500 to 3,000. That's enough. But then also give the targets as well. You know what? If you do include the prices of some, but maybe you miss it on others, you can be given the benefit of the doubt. Because you can earn the right to be given the benefit of the doubt. Because you did mention percentage changes. That can cover you. But to put icing on the cake, you can mention, price you see gold at, prices come from, and price you think it can go to. Okay, keep going.
So the next 15% of my portfolio, I'd like to invest into bonds, and these are going to be the 10-year US Treasury yields, which currently have a yield of 1.57%. So I believe, although the yields are extremely low, it also offers portfolio sense of certain returns. The US has never defaulted on a bond payment and currently has a credit score of AAA. However, I would like to wait 6 months before purchasing these bonds due to the positive relationship between bond yields and interest rates. Governments across the world have talked about increasing interest rates, and economists are expecting to come sooner rather than later. So if interest rates go up, it means our 10-year US Treasury yields will go up, allowing us to maximize the returns on our portfolio. So the final 5% of my portfolio, I would like to invest into cryptocurrency, and specifically XRP, who are owned by a company called Ripple. It currently stands at $1.09 per coin. And it is it's a ledger of devices which allow digital secure payments and the transfer of digital assets. So I believe this has a greater usability than Bitcoin, being cheaper and also quicker to send. And this has led to Ripple actually making partnerships with 10 banks, including Spanish bank BBVA. So I believe this, in terms of just with market growth as well, we've seen 2 million wallets in 2015, crypto wallets, turn into 75 million in 2021. And with firms even like JP Morgan now offering cryptocurrency exposure to their clients, I believe the crypto market has a vast opportunity for growth.
Okay. If you're talking about Ripple, make sure you include the SEC approval.
Cool.
That's a potential catalyst. And as always, a price target, $10 or whatever. Yeah. What's that? How much percentage points have you used so far?
That is full. So I've used 50% in equities, 15% in gold, 15% in aluminium, 15% in bonds, and 5% in cryptocurrency.
Okay. Use 40% for equities.
Okay.
And use 10% in cash.
Okay.
Okay. Good answer. Very good answer. One thing you missed out of everything is risks. So always finish your answer with either, do you know what? Maybe it's best to finish your answer with overall risk in your portfolio, right? You can just cheat and say, given equities is taking up a large percentage of your portfolio, and you did mention inflation. To be honest, maybe I'm being a bit tough. You did mention inflation being a risk and gold being a hedge against market downturn. So you did mention that. But maybe just a touch on tapering as a risk and how it can affect gold, how it can affect stocks, how it can affect bonds. But you can say as a portfolio, your portfolio as a whole has a large exposure to a rise in interest rates. But then you can finish by saying you don't see that happening anytime soon, despite the talk of there potentially being a rise in rates or some tapering coming in. You don't think that will actually happen, right? So it's a risk, but then you've considered that risk with an opinion. Okay. Yeah, that's a 10 out of 10 answer. Honestly, I think already you're 8.59, but that gets it to 10 out of 10 answer. Very good answer. Brain teasers. What's 6 cubed?
6 cubed is 6 times 6, which is 36, times 6, which is 180 at 36, which is 216.
Good answer. What's 99 squared?
So in this scenario, I would do 99 times 100, which is 9,900, and then minus 99, which I can just do minus 100, add 1. So that would be 9,801.
Good answer. Okay. Do you know what Rubik's Cube is?
Yes.
Yeah, okay. Usually they're 3 by 3.
Yeah.
Imagine one that's 10 by 10 by 10. What's the volume?
10 times 10 is 100, times 10 again would be 1,000. So
all right, cool.
1,000 cube.
Imagine a scenario where I took a slice off the top, a slice off the bottom, and all the sides. So it's like I'm taking off one layer, one cube. Yeah, one layer of cubes from the whole Rubik's Cube. That's 10 by 10 by 10. What would be the dimension? Have you heard this question before?
Yes, I think you. No, yeah, no. Well, if it was anything, I would say no.
Okay. Yeah. What's the dimensions of the new shape?
So when you're taking, so virtually when you're taking a side of each, you're losing a row from the top and the row from the bottom of every single side. So you're basically taking the outside shell of the Rubik's Cube off.
Yeah.
So this would leave you with dimensions 8 by 8 by 8 instead of 10 by 10 by 10. Okay,
cool. And what's the new volume?
So that'd be 8 times 8, which is 64, times by 8 again. So I'm going to times it by 5 first. So 64 times 5 is 320. And then I'm adding 64 on to that, which would be 64 into 320 would be 384. Add 64 onto that again would be 444, 448. And then add 60 onto that. So I've got 448. So I'm going to add 50 onto that to get to 498. And then I'm going to add 14 on to get to 512.
All right. Right answer, interesting method. Quicker way you can do 64 times 8. 64 times 10 is 640. 64 times 2 is 128.
Yeah, that makes sense.
640 minus 28 is 612. 612 minus 100. 512. Yeah. But you got the right answer, and that's good. Sometimes people use complicated methods and then get the answer wrong, and that's bad. Final brain teaser. Let me make it a bit more tricky. How many hats are there in the UK?
Yep. So before starting,
including this one.
Yeah. So before starting this question, I'm going to make a few assumptions about how many hats there are in the UK. So I'm going to assume that with a population of 70 million currently, I'm going to assume 50% of the population have 4 hats. I'm going to assume that the other 50% of the population may have no hats at all. So in terms of our assumptions in a minute, we can take an average of that. So 35 million people have 4 hats, which gives us 140 million, and the other half have no hats. So per person, we're looking at average of 2 hats per person. However, when looking at this scenario, we also have to include hats that maybe are not, that are still in stores, for example. And to do this, we can think about how, if everyone in the country looked to buy a hat, how easily would they be able to do this? And personally, I believe that they would. I feel like most of the population, for example, maybe 90% of the population may be able to get a hat on that same day, whether before stores run out of stock. So that would add another 63 million hats in the UK, giving us a total of 203 million hats so far. Besides this, we also have to think about the stores that still have hats in stock. So we may say half of those hats, so we could say another 30 million that are not in stores may still be in stock. So that takes us up to 233 million hats within the UK. And then the final kind of aspect we have to look at is hats that are maybe not finished in production or that are still in landfill and have been thrown away. When we actually think about hats that have been thrown away, this is probably going to be larger than the total amount of hats currently in circulation. So we could potentially add 100 million hats onto that, taking us to 433 million. And in terms of hats that are still going through production, we could potentially look at maybe half of the ones that are in stock. So maybe 15 million hats that are not yet complete. So that would take us up to 448 million hats in the UK.
Good answer. I can't argue with that at all. Perfect answer, actually. They want to test, they're not actually trying to test your finite answer, they're trying to test your process. They're trying to see how you think with these kind of questions. They might also ask you, how many footballs can you fit into Wembley Stadium or into a lorry, and it's a different thought process. So if you ever get stuck, they might give you some hints, or if you get halfway, they might give you some things you haven't thought of. Just go with the flow. And finally, another thing that throws people off, have you got any questions for me?
Yeah, so I'm being interviewed tomorrow by the credit market making team.
Okay, make sure you know what a CDS is. What is a credit default swap?
So a credit default swap is basically a financial instrument that increases in value when the risk of a default on a loan increases.
What's their call option?
So call option is when you're expecting the price to increase. So if we talk about options in general, you have the right but not the obligation to purchase security at a predetermined price before a certain date. So for example, if you do a call option, you'd be expecting the price to increase.
What's delta?
So delta is one of the Greeks that determines the price of an option. So this allows us to find out the change in price of an option with a $1 change in the price of the underlying asset.
What are the other Greeks?
So if we look at theta is the time decay of an option. Okay. So it shows you how the price of an option falls when it gets closer to its expiration, that it's got less room for growth. And then another important Greek we can look at is gamma. So gamma tells us that the rate that delta is going to change. If the price of the option continues to increase, will the price of the option increase exponentially, or will it slow after its initial increase?
Rho?
Sorry?
What's rho?
I can tell you what.
Okay. Rho is interest rates. The effect of interest rates on the price of an option.
Okay.
So there are five main Greeks. There's rho, there's delta, there's vega, there's theta, there's gamma. Right?
Cool.
So take a look at vega as well. Vega is volatility. Right? Yeah. Other than that, good answer. Listen, if you get as far as knowing what the Greeks are and being able to explain 1, 2, 3, they're not going to ask you the rest. I just did that for completion. What is the difference between a forward and a future? Or what are the differences between a forward and a future?
Yep, so futures and forwards are both financial derivatives usually used for trade speculation or hedging. If we first have a look at forwards, they are over-the-counter traded in comparison to a future, which is traded in a clearinghouse. So over-the-counter traded means you're likely to know who's on the other end of your trade.
Yep.
And unlike futures, forwards are customizable. Again, because you've got that over-the-counter experience, you can make it more customized, which actually leads to forwards, when I was reading, having a higher rate of default than futures. Besides this, forwards are also mainly used for commodities I was reading, and mainly kind of farm tools, for example, wheat, barley, etc.
All right. What's contango?
Contango?
Yeah.
I can tell you.
All right, go and read up on it. I'm pushing you a bit more, you know. What's the relationship between interest rates and bond prices?
So there is a inverse relationship between interest rates and bond prices. As people who are holding bonds, if interest rates go up, will allocate their capital more towards interest rates. Right. However, to the extent that you see change depends on the convexity of the convexity of the bond.
Okay. If I'm playing devil's advocate, I'll ask you to start explaining duration and convexity, but I'll leave that for now. Have you got any questions for me? It's a tough question to ask in a mock because I don't actually work for JP Morgan, but here I'm actually going to give you some suggestions. What do you like most about the culture at JP Morgan?
Okay.
And is there anything you actually don't like about your job? Yeah? Two nice, easy questions to ask. Don't overdo it. And you should be okay. And it's okay if you ask those exact same two questions to every single person that interviews you. Don't overthink that question.
Okay.
Yeah. That's my advice. But yeah, well done. That's the end of the interview. I'd say you done. I want to give you a 9 out of 10.
Thank you.
I'm going to give you a 9 out of 10. 8.5, 9 out of 10. All the feedback gets you up to a 10 out of 10. But you did really well in comparison to a lot of interviews that I've done at this stage for mock. Yeah, that's it. So all the best with your interviews. And yeah, well done.
Thank you so much. Again, I appreciate all the help you've given us over the past 6 months. Take care. Bye.